Everybody, this is your boy Jupiter, and welcome back to the channel where we talk all about financial literacy. If you're new here, please like and subscribe. Really appreciate all your support, and check out those offers we have there in the description section. Really appreciate all your support. So today we're going to talk about credit card statements and what you need to be looking out for so you could be more financially literate in terms of understanding what all this credit stuff is about and all these charges and all the perks. Really important. So, the first thing you need to know when you're looking at your credit card statement is one, you want to check for any charges that don't look legit. Make sure all your charges add up and the totals add up so you don't have any problems. The second thing you want to look for is your billing cycle because that's how they calculate how to charge you interest. So if you know what dates they're charging you interest, you make that purchase after that date so it gives you another 30 days to pay it off without being charged. And the last thing is that you want to see how much interest you're actually being charged if you do keep a balance so you can kind of calculate that and see if you can pay it off a little faster, maybe put some more money towards your bill so you don't get charged as much interest at the end of the day. The fourth thing is that you want to see how many points you have. Points are great. It basically gives you a lower price than what you would pay if you were paying cash for certain things. So that's always a nice perk. So before we get into it, the number one thing in terms of when you're looking at specific things on your credit card statement, make sure your account information is correct. Your account number, but really your name and your address. Make sure everything is spelled correctly. Make sure they have your correct address because you don't want any problems in terms of when they decide to send you a paper bill, because a lot of us do paperless, which is great. But if you do get sent a bill in the mail, you want to make sure it gets sent to the right place. So that's the number one thing. Make sure your name and make sure your address is correct. If it's not, fix it on the website. Go to the bank or go to the credit card company and make sure that all that information is right. Okay? So let's jump into this credit card statement example. Okay, so let's go here. Okay, cool. So as you can see here, this is usually the first thing you'll see on your credit card statement on the first page. Just so you know, we're going to be looking at different parts of a credit card statement. These may be on different sections of your statement. The statement may be, 1 to 5 pages, depending on how they set everything up. So definitely make sure you look through every page to make sure you find these on your credit card statement. All right, so the first things we have here is your new balance, which is $179.64. That's your balance on your credit card, all of the purchases you made. And then you have your minimum payment due. So your minimum payment is $40. And also the payment due date. So it's going to be the 19th of each month. We have a nice calendar here that tells us when that payment is due, the 19th, and look, it's on a Sunday, so they're letting you know, hey, make sure you pay that minimum payment due at least by that Sunday, the 19th. So let's talk about the late payment warning. It says if we do not receive your minimum payment by the date listed above, you may have to pay a late fee up to $40, and your interest rate pretty much will increase to a maximum penalty APR of 29.99%. They could have just said 30%. But very important that you pay your bills on time. Don't worry if you don't have enough to cover the whole balance. Just make the minimum payment due if that's all you have. Your credit score is very important. And if you do not have a good credit score, you get the higher rates for everything. You're going to be paying more for everything. So if you have a higher credit score because you pay all your bills on time, you're in good shape and you can always get the best deals when you're going out there, especially when you're making large purchases. So make sure you pay your minimum payment due every month so you don't have any problems and you can keep your credit score high. The next thing is your minimum payment warning. If you make only the minimum payment each period, you will pay more interest and it will take you longer to pay off your balance. So basically here, yes, they're giving you the minimum payment due and you can make that every month if you choose to, but it's really not the best strategy. We'll get into that in the next slide. Over here, we have your reward summary, and these are basically the perks for having your credit card. So in this example, this credit card gives you 1% back on every dollar that you spend. So we have previous points here, 626. We just added to 95, and now we have 921 points for our credit card, which is cool. And they also do tell you here what the terms are. You get a limited 1% cash back on your purchases, and then every quarter they'll switch it up and give you a category or stores you can go to that'll give you an additional 4%. So you get 5% cash back up to the limit that they give you. In this case, is $1,500 for that category. So that's one perk of having a credit card. Another perk of having a credit card, which may not be seen as a perk, but I think is really important. If you have any fraudulent charges on your credit card, it's a lot easier to get that straightened out versus you using a debit card, which is tied to your bank account. Because once that money leaves your bank account, it's really hard to get that back in terms of the time. With credit card, it's not really real money, quote unquote. So a credit card company say, oh yeah, this is fraudulent, we'll just credit you back. But if you're dealing with a bank, it takes a lot longer for them to make sure everything is legit. They got to go to the fraud department, and now you're waiting to get that money back into your bank account. So my rule is, like most purchases, especially online purchases, in-store purchases, just use a credit card so you at least have that level of protection in terms of any fraud going on. If you do it with a debit card, which is tied to your bank account, I'm sorry to say, but you may be in a world of hurt if somebody gets access to that information or your PIN or anything else like that. So just make sure when you're making purchases, use your credit card. If you need to go to the bank and take money out, that's what the debit card is for. Everything else is a credit card. All right. Just wanted to go on that little tangent because I think it's really important that people understand the difference between the debit card and the credit card. Okay, so let's go to the next section. So that minimum payment warning, if you make no additional charges, so you basically keep the same balance, and each month you pay only the minimum payment, you will pay off this balance in about 5 months, which is not bad. And you'll end up paying an estimated total of $188. Now, let's go back to the first page. The balance is $179. So you can see here, 179, and this is 188. You're being charged $9 in interest over that 5 months. And this example is not too bad. But if you only make the minimum payment and you have a really high balance, it's like $2,000 or $2,500 or even more, you're going to be paying a whole lot of interest. So it's really important to try to keep your balance down as much as possible, but then also make more than the minimum payment. I try to pay double whatever the minimum payment is. So they're saying $40 is the minimum, I'll pay $80. And I'm paying down that card a lot faster. My credit score goes up because I'm using less of my credit. And another tip is that your credit score is based off of how much credit you have over the total amount of cards that you have, and you want to keep your balance 30% of whatever that total is. So we're going to get into that in the next slide, but it's really important that you try to stay under 30% of all your total credit so you can still keep a nice high credit score, and of course no late payments or anything else like that. Okay, let's continue. So this is your account summary. So you're going to see your account number here, and it's going to tell you what was your previous balance. Previous balance is $194.82. What payments, credits you had. So you made a payment of $310, which is great. And you also made purchases for this period of $294.82. So this is good. Let's talk about these right here. So you have cash advances. Zero, never do a cash advance out of your credit card. Please go to your emergency fund, take out some money if you need to. Do not use it because you'll see the interest rate on this is crazy. So just don't do it. Balance transfers, I've talked about balance transfers in some other videos. I'll put up a card here so you can check them out. Zero APR credit cards are great because you can use that to pay down debt on something that has a higher interest rate for 12 months, 18 months, sometimes even 21 months. Look at the terms, pay it off in the time that you need to, and you'll be fine. But we don't have any balance transfers here. No fees charged because we made on-time payments. If you have a late payment, you will see some fees being charged. And the interest charge, no interest charge because the balance was paid off before the billing cycle. And let's talk about the billing cycle. So we have the opening closing date. So it says right here from the 23rd of October to the 21st of November. So this is your opening and closing date. This is where they're charging you the interest every day, depending on what your balance is. And then from there, they calculate that total and then they give you the bill. So a strategy you can do is that if you know you have to make a big purchase or something like that, and you don't want to accrue a bunch of interest, and you have the money to pay it off, of course, make that purchase after the 21st. So then you have 30 days or 28 days, whatever the billing cycle is, to pay that off before the next bill so you don't get charged with the interest. That's really powerful to understand when you're using credit cards. You can play the game to win. Your credit limit. This card has a credit limit of $3,500. So I was talking in the previous slide about your credit score. Now, in this case, just talk about this one credit card. If the credit limit is $3,500 and we want to stay under 30% of our utilization rate, basically the balance, 30% of whatever the credit limit is, what would that be? So I can't do 30% off the top of my head, but what I can do is 10% off the top of my head. So I could do 30, what's 10% of 3,500? Well, 10% of 3,500 is 350. And what's 350 times 2? Well, 350 times 2 is 700. And what's 700 plus 350? And that would be 1050. So you want to keep your balance under 1050 to keep a really good credit score for this card. 30% is your utilization rate. You want to keep it under so you can keep a good credit score. So this will be 1050 that you want to keep the balance under. They also show you what your available credit is, and your available credit is 3320. Cash advance line available for cash. Don't even look at any of this stuff. Do not do a cash advance. Don't even worry about none of this. This is straight garbage. We have your past due amount, which is 0. And we also have your balance over the credit limit, which is 0. So yeah, this is your account summary. Very important. Make sure you find this on your credit statement. All right, let's go to the next slide. Let's talk about your account activity. So they basically tell you what the date of transaction is, whatever the merchant, whoever you purchase something from, name of the business, and of course the amount. So we have payments and other credits. So good, we made 2 payments here, one of $210, and then you made another one of $100 on 2 different days, which is great. And then you have your purchases that you made on these dates here. And then it'll say, of course, it will say the name of the company that you purchased it from, and of course the balance. So main thing here is that you definitely want to look at this account activity, because if you see something here that you know you did not pay for or you did not authorize, call up your credit card company immediately. Do not wait 2 days, 3 days. Call them up right then, like, hey, I have a charge here on 11/1 that I did not make of $175.65. And they'll see that the pattern doesn't match up, or is that purchase was made somewhere else in the country. It's really easy to see if it's fraud or not. And then once it's cleared up in a couple days, you'll see that credited back to your account. Again, a lot easier than having to deal with a debit card when they take money out of your bank account. That takes a lot longer for that to get settled up. So again, use credit cards for purchases. Use your debit card just to take out money out of the bank. That's the rule. So yeah, make sure you always look at your account activity to make sure there's no fraud, but also just make sure all these amounts are correct depending on where you bought something from when you went shopping. Just so make sure you have that. Okay, so next thing here is your interest charges. So it says your annual percentage rate, APR, is the annual interest rate on your account. So we have different balance types, and then we have our APR, balance subject to the interest rate, and interest charges. So for this card, the purchases, the interest rate is 19.24. This balance subject to the interest rate is 0 because the last balance was paid off before the billing date, so no interest. And any interest charges, of course, there was none. Cash advances, garbage. Don't even do that because you can see the rate is much higher. And balance transfers, if you can get a 0 APR balance transfer for a specific amount of time, use it wisely, and stay on top of it and make sure it's paid off in that time. Because they'll tell you if you don't do it, that balance subject to interest rate will be crazy if it's been over a year or more, 18 months. Another important thing here, 30 days in your billing period. So understand how many days in your billing period so you can be strategic when you're making your purchases, and also making sure you're paying off that balance before then if you can. So we have a couple letters here. We have 19.24%, and we have V, and then we have D. So V is variable rate. So it's a variable rate, 19.24. If you don't know what a variable rate is, basically this can change. Most of the time it's going to go up depending on the month, the interest rates, what the government does, things of that sort and stuff. So it's not a fixed rate. If it was fixed rate, then it'll be very easy to calculate because you'll just know, okay, whatever my balance is going to be that. May change from month to month or year to year. So keep your eye on that. That's why another reason why you always want to look at your credit card statement. The D is the daily balance method, including new transactions. So that basically says this is calculated based on whatever your balance is every day. So if your balance is going up every day, you get charged more. Balance is going down, it charges that interest for whatever that balance is for that day, and it'll be less. You have average daily balance method. That's a different one. They're not using this here. So your interest rates, your interest charges, be wary of what your rate is, what balance is subject to the interest rate. Now, if you keep a balance, there's going to be some numbers here, and you will have some interest charges here. So if you can use it wisely, try to pay everything off before the end of the month so you won't have any problems and you won't have to be subject to interest rates, which is great. Just to talk about this again, cash advances, don't use them, please. Balance transfers, use that strategically. Okay, so let's see if we have anything else here. Okay, we're back to the beginning, so great. So this is the end of the tutorial. Let me go back to the studio. Cool. So yeah, I hope that this tutorial, in terms of showing you how to read a credit card statement, has helped you in any way, brought some value to your financial literacy. Again, please like and subscribe. Share this video with someone who needs it. Really appreciate all your support. And I'll see you in the next one. Peace.